American Bitcoin just crashed 15% in one day, $3.58. Meanwhile, Bitcoin itself only dropped 0.05%. Something does not add up here. Why did a Bitcoin mining stock fall 15% when Bitcoin barely moved? The answer reveals a dangerous pattern in crypto stocks. Welcome to Wall Street Lens. First, let me tell you what American Bitcoin actually is. Ticker symbol ABTC. It is a Bitcoin accumulation platform. They mine Bitcoin, they buy Bitcoin, they hold Bitcoin. The company is majority owned by Is ABTC Corp. And here's the interesting part. The co-founder and chief strategy officer is Eric Trump. Yes, that Eric Trump. Now, let us look at Monday's action. ABTC fell 15.57%. Finished at $3.58. Bitcoin, on the same day, down only 0.058%, hovering around $86,000. The stock fell 300 times more than the underlying asset. This is what we call leverage risk. Here is the bigger picture. Bitcoin has dropped 21.6% in the last 30 trading days, from 110,000 down to 86,000. That is a massive decline. But ABTC and other Bitcoin mining stocks, they amplify every move. When Bitcoin drops 20%, mining stocks can drop 40 or 50%. It works both ways. But right now, it is working against investors. Let me give you some good news, because there's another side to this story. American Bitcoin just reported earnings, and they were actually impressive. Q3 net profit $3.47 million. Compare that to last year. A net loss of $576 million. That is a massive turnaround. Revenue numbers are even more impressive. Q3 revenue $64.22 million. Last year, same quarter, only $11.61 million. That is a 453% increase. Year over year, the business is actually growing fast. Eric Trump released a statement about the quarter. He said the third quarter validated the thesis behind American Bitcoin. What is their thesis? Two-part strategy. Part 1. Mine Bitcoin below market price through scalable asset-light operations. Part 2. Buy Bitcoin at market through disciplined purchases. They added more than 3,000 Bitcoin to their reserve this quarter alone. His exact quote was telling. While others paid spot, we generated Bitcoin below market. This dual strategy is how we intend to compound value for shareholders. In other words, they're not just buying Bitcoin like strategy does. They are creating Bitcoin cheaper than market price, then also buying more. Double accumulation. On paper, it is a smart approach. So here is the contradiction. Strong earnings. Revenue up 453%. Profitable quarter. Growing Bitcoin reserves. Clear strategy. Yet the stock crashed 15%. Why? Because crypto stocks are not valued on fundamentals right now. They are valued on sentiment, and sentiment is terrible. Let me put this in perspective. When the fear and greed index is at 23, extreme fear. Investors do not care about your revenue growth. They do not care about your strategy. They sell first, ask questions later. ABTC is a victim of broader market panic, not company-specific problems. Here is my analysis. The disconnect between fundamentals and stock price creates opportunity, but also risk. If Bitcoin continues falling, ABTC will fall harder. That is the nature of leveraged exposure. Mining stocks are effectively leveraged bets on Bitcoin. Great when Bitcoin rises, painful when Bitcoin falls. Let me compare ABTC to its competitors. Strategy, formerly MicroStrategy, down 40% in the past month. Coinbase, down 20%. HUD, the parent company, also struggling. This is an industry-wide problem. ABTC is not uniquely bad. It is caught in the same storm as everyone else. The bull case for a BTC. They are building a real business. Mining operations generate Bitcoin below spot price. That is a genuine competitive advantage. Revenue is growing exponentially. They just turned profitable. Eric Trump connection brings attention and potentially political favor. If Bitcoin recovers, a BTC could recover faster due to leverage effect. The bear case. Stock is still highly speculative, trading at $3.58. Bitcoin needs to stabilize before mining stocks recover. Competition in Bitcoin mining is intense. Energy costs can squeeze margins, and the Trump connection is a double-edged sword. Some investors see it as positive, others see it as political risk. My bottom line on a BTC: strong fundamentals, terrible timing. The company is doing the right things, but the market does not care right now. If you believe in Bitcoin's long-term future, BTC offers leveraged exposure with a real business underneath. If you are cautious about crypto, this is not the stock for you. What do you think about Bitcoin mining stocks? Worth the risk or too volatile? Drop your thoughts below. Subscribe for more market analysis. Wall Street Lens. See the market clearly. See you in the next one.